The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we found some green on the screen across most of the ag markets on Thursday. The grain and oilseed complex especially had some good green and good support overall. We had more gains in cattle futures on the day Thursday. A lot for us to talk about. Joining us now for our weekly conversation, he is Senior Market Advisor with Total Farm Marketing, Brian Doherty. Brian, good to catch up with you again this week, sir. And I'm just going to start right here. I know one day doesn't make a trend, but are we turning a corner maybe in these grain markets, especially corn? I know a monster weekly export sales number, some support here. What are you thinking, Brian?
Yeah, good question. I'm not sure is the answer, because there is a monster crop coming, but you can't ignore 124 million bushels, actually 124 million and a half. So if we round up 125 million bushels onto the new crop corn sale, really, really good number there. Sales to date, 464 million for the new crop. And that's a little over 17% of the expected for the entire year. And we're not quite to the beginning of the year yet, which will start on September 1st, technically. So really good number. You said monster number. I'll call it a rare number. Rare that we see over 100 million in any one week, but we saw it. So it's a reflection of the market responding to low prices, good value, generally weaker dollar than where it was 7 months ago. And yet, you've got a really good forecast for the upcoming crop. You've got above normal temperatures, above normal rainfall for, I think, 3 days in a row now on the 6 to 10 day outlook. That pushes this outlook for weather, at least rain in the forecast for pretty much the entire Midwest. Jesse, that pushes that to mid-August. So you're really getting on the home stretch. One more good rain a week or two from now finishes things out. You're getting, as to one of my customers said, you're kind of getting to that stage in corn where it goes in the dough and the milk stage. It doesn't look all that great, but then when it starts to dent, that's when you really see the weight of good corn. And we're kind of on the verge of all three of those in the next several weeks. USDA report out next week, by the way.
Well, and thinking about that USDA August report, and we're going to have various crop tours, boots on the ground here over the month of August as well. Already seeing some of those, a lot of private estimates out there. And you think about December corn, 407 at Thursday's close. We dipped below 4 for a time this week on the board. And this is something I've been trying to put into perspective this week, and I'd love your thoughts here. If we do achieve these big U.S. yields that are projected, combined with this big Brazilian crop that we've harvested, and just look at the world picture and the amount of corn that is out there, if all of this lines up and all this comes to fruition, man, that just feels like a pretty bearish weight that could maybe drive prices back down here. Brian, what do you think?
I agree with you. It feels like, right? Because you're really got two parallel tracks, both negative. You've got throughout the summer this increasing Brazilian corn crop. The numbers keep getting a little bigger. And so you got a record crop down there. At the same time, the northern hemisphere chugs along and has pretty good weather. And so you're looking at these world supplies. Yet coming into this year, due to good demand over the past year, world stocks, the usage number had narrowed into 13-year low levels. And so that you start to take that into account. Let me say 10-year low levels. I might want to retrace. I'm not sure about 2013, which would be 12 years ago. But anyway, the point of it is that the world supply of corn, it ebbs and flows. And there's a lot going to likely flow to the market. But when you step back and look at the big picture, it's an amazing that from this perspective, December corn futures have traded at 440 in 12 of the last 13 months. We mentioned that before. And here it's at 407. So you think 407, 440, what is that? 33 cents. All this massive supply is only worth 33 cents of pressure to the market over the last year. So one of two things is likely to happen. It does come under additional pressure, and that's what I would ward against or guard against. Big crops get bigger. On the other hand, Markets move on perception, they move on momentum, they move on attitude. Perception has been big crop getting bigger, momentum has been down, the attitude has turned bearish. How do you reverse that? How do you turn that corner? You either do it with a supply shock that something comes along, let's say, all of a sudden, real hot, dry pattern that crimps the crop. That's not likely. You might do it with an early frost. That would be very impactful. That's not likely. And we're already seeing good demand. So to really think demand's going to blow higher all of a sudden, that doesn't seem likely. So unfortunately, I think for the moment, the bears sort of have the upper hand. Every one of these rallies that we've had over the last several months has ended in new lows. And unfortunately, I'm probably in that camp yet until we get some more information behind the market. That'll come on August 12th, WASDE report. It'll come from Boots on the Ground, Pro Farmer Tour, and other private forecasts. But we're getting that news into the marketplace and behind. So sorry to be long-winded, but I think it's just really important to recognize that there's probably still downside risk, but we are seeing the market respond to low prices in two forms. One, farmer selling just isn't interested in new crop at these prices. And two, we are seeing new crop purchases that are impressive.
On the wheat side, wheat was the leader, I would say, to the upside on Thursday, or it was pretty close to it. I know beans were right there too, but wheat trying to find some support in those markets. What's your feeling on the wheat complex this week, Brian?
Well, wheat prices really got tanked again, pushed in the new lows. You're having some trouble in the forecast, at least, and maybe in reality, harvesting the spring wheat because it's wet. And now you start talking about quality concerns if that 6 to 10 day forecast has bearing. Export sales were good today. So I think wheat became a value buy when export sales at 27 million bushels showed up this morning and helped to give a boost to somebody to buy. Now, whether that buying is in the form of just covering short positions or recognizing strong value, um, not sure. Don't know yet. Don't have enough information on today's trade to really kind of pinpoint. But keep in mind, corn, beans, wheat, the funds have been pretty harshly selling these all along, all season. And I think they did so pretty aggressively end of last week, early this week. We don't see that in the commitment of traders report because when that came out on Friday, that's through the previous Tuesday. But then remember, you have Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday trade, and now Thursday. So I think we saw a short covering today, a little bit of support across the grain complex. The other thing, I'm just kind of maybe searching for something here, but if you look at like the Dow Jones equity market, the Dow Jones Industrial Average, it's really trading sideways for a long period of time at a big dip with the tariff talk. But if you go back and look at that market historically, it's trading really sideways. The S&P maybe a little bit higher, but at some point you're likely to see some money move out of markets that aren't moving up or gaining and move into value. And I wonder if we're not seeing that in commodities this week, the start of some value buying, starting to buy into this. The fund money, we talk about that a lot, the managed money, Jesse, they don't have some magic formula to just find a low. But if they start to buy, let's say, corn under $4 or exit long positions, that would make sense because the market is probably in the lower fourth or fifth of its range for the year.
Soybeans, another good rally there Thursday that we definitely like to see. But I know export demand for soybeans, I think we're seeing some of the poorest numbers in 20 years, if my memory serves me right. I mean, the
It
soybean picture
does.
is a totally different picture, Brian.
It is, but on a number for today alone, it was a good number. It was 17 million old crop, 20 million new crop. So that's a nice daily number. Now the new crop number, we're not seeing typically kind of this midsummer beyond is when we really start to see purchases into the US crop, right? We see that robust, strong export sales number. So I might get a little concerned sooner than later that the USDA, I don't know if they'll do it this week, but they might end up lowering exports some at the same time increasing yield, or at least leaving it change where the idea could it go up. Pre-report estimates on the ranges for the WASDE report, interestingly, are looking at higher yield for corn, and that's the expectation. You look at soybeans, maybe a slight bump. Crop ratings probably pushed the yield just around 53 bushels an acre, maybe 4/10, 5/10 higher. So beans just haven't had a lot of firepower lately. We love the bioenergy complex and all of that. But there again, you need to have either robust exports or some weather issues of consequence. We don't have either right now.
We are talking with Brian Doherty, Senior Market Advisor at Total Farm Marketing. Let's go over to the protein sector. Cattle, again, just another day higher in futures, finding more midday support. Feeders leading the way. This is a fascinating cattle market, Brian. I don't have any other words to say for it here at this point, I don't think.
It is fascinating. It's, the higher the market goes, we saw the cutout values drop about $30 all of a sudden this week. They're picking up $10, $12. We're seeing the cash market hold firm to firmer, hold firm or firmer. And then you're seeing the board that has been playing a discount really trying to catch up this week. And you get a lot of what I call unintended purchases in a market like this, and that is people who are short, they don't like the margin calls or their buy stops get hit. Those are buys that weren't intended but occur from either a risk management perspective or just to get into the market. Speculative buying has gone aggressively into the back months. That's the big surprise for me this week, the willingness to buy at such high levels on back months, and they just keep pushing higher. And so, it just keeps bringing us back full circle. Well, are these prices going to expand the herd and create that, or is this going to create more short-term supply of what's available for cows and for cows, and even tighten the supply up longer term? I think if I could maybe make the argument, my view of the world is that beef prices are just going to get so high that it's going to create such an environment to increase the poultry and pork industry that those supplies will be coming. But right now it's still strong, and you kind of look and say, well, where is that demand, or where's it come from, or how does it happen? Well, a lot of meat is sold through, like, let's use the name Texas Roadhouse, or let's use
Mm-hmm.
Costco or Sam's Club. And it may very well be that Costco or Sam's Club is losing money on their meat, but it brings people into the store and they buy all these other ancillary items. And at Texas Roadhouse or a restaurant, you're buying a drink and you're doing this and you're doing that. Maybe they take a little bit of a loss on that. That's in the marketing world called a loss leader. So maybe it's still a loss leader, but I just can't fathom that the consumer can continue to chase this. Even if you have money, you've got to start thinking common sense at some point, how much you want to pay for a dinner versus maybe a cheaper alternative.
No, that's a great point. How about the dairy market, hog market? Any notes on that side of the protein complex, Brian?
Yeah, nice bump in cheese prices. Good rebound this week in the milk market, retracing much of its losses from the last 2 weeks. Still in the doldrums. Still, I think, experiencing the effect of a really kind of negative front month production report, but then revision to the previous two. Global dairy trade shows some stability or maybe a little strength. We like what we're seeing there. We like the bigger kind of picture that milk and cheese and butter are finding seasonal demand or starting to find that. We're starting to see those charts tick upward. We saw a nice little bump in cheese products again today. You've got barrels closing day 179.50, up a nickel or half a cent, excuse me, and up 2.5 cents in the blocks, 182.50. Really nice to see that creep back up into levels where if you equate that back to milk, should suggest $18, 18 and a half, $19 milk. That's good for the producer. What it doesn't suggest is 21, 22, $23 milk. There, I think the supply is just too heavy, and we find that demand just doesn't hold up in this environment. It just doesn't hold up into those levels. So, like to be that optimistic, but I don't think that's realistic at this point.
Good thoughts as always. Anything final you would mention or reiterate to folks as we close out the show today?
I write something called a perspective, and I wrote my perspective this week. It said marketing is as important now as ever, And so that's my messaging. Just don't take your foot off the pedal just because prices are low or bouncing a little bit and you're just kind of, well, let's just focus on harvest. Look at the carry in the market, work basis contracts, make phone calls, see what they can give you. If you deliver at a certain point, maybe you can get some good basis out of that. Now's the time where sort of the tough got to get tough and get going and figure this out, because it is a big supply year. We've got great looking crops. I love today's export sales number because it's rare. It's rare that we're above 100 million on corn, and we got one. So maybe we can string some together. But bigger picture perspective is just, I think, a little bit more dynamic in that there's big supplies available to the world right now. And then I'm going to flip that to the end user perspective. You may be getting some warning shots across the bow this week. There were big export sales, and the market's plunging yesterday and coming back, and then firmer today. That somebody's starting to want to own this market near $4 on December corn, or a little bit under. November beans under $10. These are good values. They're not dollar values that work well for the producer, but they work well for the end user. So if you're an end user, don't fall asleep at the switch and get comfortable. There's not likely to be a massive rally, but just think about 6 months from now, 6 months from now, 12 months from now, what this could look like if somewhere in the world, or a lot of places in the world, all of a sudden don't have these record crops continually forecast. That the world is dynamic and changes a lot in a year.
Brian, if folks want to talk with you about their marketing plan and more, I know a few ways to get a hold of you. How can they reach you, Brian?
I'd like a phone call first, 800-334-9779. Ask for Brian with a Y, or the Brian that's on Jesse's show. So, and then email's great. Brian with a Y at totalfarmmarketing.com. So just my first name at totalfarmmarketing.com, or check out our website. A lot of great resources there. You can connect with us that way, or connect with me through that as well.
Totalfarmmarketing.com. Brian Doherty, good to talk with you, my friend. Have an awesome weekend. We'll talk to you next week.
I thank you very much. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.